Welcome back, everybody. Welcome into our usual daily recap. Today is the 9th of September, and as usual, we're going to do our daily recap on gold, Bitcoin, and EuroDollar. Thursday, day of the jobless claims. What we were expecting from the morning actually might be even better. From here, after the creation of this order block, here we saw very impulsive move up with the NFP, some retest of the top of the order block, a small rejection, failing to break and making new highs, and then optimism given from either Biden, either Yellen, some optimism coming into and giving USD short-term strength, all due to the pricing in concept. Today, we just got our Biden plan, not very particularly specific, just further obligation of making the vaccine into for every industry, for almost 2/3 of the labor market, as I was expecting. I was expecting yesterday and even today that there is not enough juice yet to have price deep below these levels, and I was expecting a sort of higher pullback, revisiting these lows on the left hand side, and then maybe continuation down. We got a sort of retest, but not that far. As you can see, we got the retest of this ESA from yesterday here, and then some bouncing, and then you can see these wicks on the downside showing that below this level around 1787, 1788, there's a high demand area. And for the supply area or zone or whatever you want to break below, what we're going to need is actually strong reasons. So maybe either a very high PPI tomorrow, very very low PPI, very optimist talks from the Fed. To have a break above the supply, we need some really negative news for the dollar. So as you can see, we broke our bearish structure from the day before. We were in a continuous bearish correction. Here the reaction at 1789 broke without retesting this PSA, this trend line, reacting as you can see at these previous highs on the left. Then the New York very aggressive sell-off, reacting at 1784 PSA, and then bouncing back up. But let's jump on the 1 minute as usual. We're going to see from the morning here. Okay, we were reacting above 1789, then slowly below 1789, trying to break, failing again, but still, as you can see, creating a candle support below the key level. As you can see, then we're coming towards this is Eurozone open that gives you a bullish trend, creating higher highs and higher lows. Then you see London open creates this lower wick, as you can see, and then with the London volume, you see break and retest of the key level. You have safer entries above these previous low highs if you want. This was high risk high reward entry. This was high risk high reward medium risk safer entry. here, and then slowly, but without any big pullback, you see price reaching 1795 next key level. So it gave you a reward entry after London Open makes lower wick. Medium risk entry. There you go. Then at 1795, after 60 pips, you have a double top being created, a reaction, but as you can see, the lows is not broken. We are not breaking the lows. And you see bouncing. A first attempt to break above the PSA and the key level, failing. And then you see all pre-London very, very slow. Yes, we are above the key level, but not very decisive. Coming towards pre-London, pre-New York time. This is 7 a.m. Eastern. We're still failing to break not even these lows, which I might expect, but at also the 1 p.m. open, which was exactly here, you see that it creates a lower wick and then continuation up. Sort of the same as we saw during London Open. You see very aggressive, not many retests, no retests, but just straight up to almost revisit 1803, reaching 1801, which was, if you remember, in the past weeks, a huge PSA already. You see pullback, a second attempt, failing to break, weaker and weaker. As you can see here, we are identifying a bearish correction, but we are identifying a failure to make new high. Again, many times, and then you can have your high risk reward entries here. You have some sort of retest. The main retest is here, retesting these previous lows. Remember that we always want to retest the lows of the previous leg. As you can see, if it was double top, you almost always have a retest of this previous of this one. You have a break and retest and then continuation down. This is sort of what is happening here. Retest and then continuation down. There you go. You see medium risk entry, medium risk because we are 20 pips above the key level, and then continuation down, almost to this PSA on the left, and this one gave you risk entry, medium risk entry. Below the key level, I don't think there was a real entry here, only here. If we want to take the risk, let me check what time was it. It's 10 minutes before. Yeah, you can grab 40 pips easily because before the candle closes, you almost always, the 4-hourly candle closes, almost always have some big movement. Okay, and then you see bullish momentum. The new 4-hour, you have a retest of this PSA. But as you can see, the trend is very short-lived here. failing to break, also confirming the correction, bearish correction trend line if you want, as a price point is failing to break again, making highs again. And we see again another aggressive bearish, retesting these lows. This time it retests the key level, where it creates another block here, giving you break and retest for more other 30 pips. So we have, of course, here. Okay. We have a risk, variable entry. Okay. This is showing you that this was a liquidity grab of the new hourly candle, 4-hourly candle, making a top wick here, and then you see the 4-hour very bearish. Also, this all this liquidity that was not used, was not validated for a continuation up, was order flow for going down. From there, you see another reaction. This was all due to the whipsawing coming from the Feds, different Feds, and the unemployment claims, the jobless claims that were better than prior, better than expected, giving dollar a nice bullish push. So from here we had some whipsaw. Then with New York Stock Exchange, actually they never made a top wick, this 30-minute candle, but straight down using the momentum and the fundamental confirms coming from the positive data. Okay, but then as I told you, we were in a whipsawing sort of trend. We see a safer entry, the break and retest again of 1789, again revisiting 1795, almost retest on the dot, continuation up. Look, you already know without even looking where this one is reacting, over there. You already know it. Okay. Then again, another rejection. Then you see price again pulling back. Again, retesting these previous lows. Continuation down. And then breaking, retesting the key level again, and then just moving, yes, above the key level, but with the day already over. As you can see, here we have the entry. Here we had second. Okay, and this is it for gold. We're gonna have to do EuroDollar and Bitcoin. And we are back with Bitcoin, following mostly the same logic of the gold. I was expecting since yesterday creating a lower high on the high time frame, of course, last high, making a new lower high, I want a lower high, for then validation to make a new lower high, lower low, lower high, lower low, and continuation down. As you can see, price followed pretty well the arrows. The reaction at these previous highs was on point, 47.50. As you can see, it was the perfect reaction for already 100 pips. Let's jump on the 1 minute. As you can see here, yes, we are moving down, but okay. Coming from Asian session, yeah, strong bullish trend. As you can see, price creating higher highs and higher lows, higher low, higher high, higher low, higher high. As you can see, you can start seeing a shift, a momentum change when from this difference you start seeing smaller and smaller differences between the higher highs and eventually also the higher lows. This is signaling that the momentum is slowing down, and is exactly where you see a reaction of the price. But as you can see, you make a new higher low. This is still a new higher low. The failure to make a new higher high starts to signal that probably we're going to have a short-term shift of the market structure, but it might even range and then make a new higher highs. What happens is that, yes, it creates a new lower low, a new lower high, a new lower low. Then it reacts this PSA and then starts already make a new higher high. As you can see, I'm breaking this point, make a new higher low, which is higher than the previous, and then break and retest of this PSA. Of course, now here I don't have the, just give me a second. There you go. I have the PPLs charted now, and as you can see, we are coming a little bit below, but we were reacting at PPLs. So let me put this one in green, because between PPLs you can take advantage of 25 and 50 pips moves. You can see here already more than 25 pips scalps. Then you see that the short-lived momentum, you see a mirror move, break and retest. As you can see, this mirror move gets mirrored, but still not closing strongly below the previous lows, but still failing to make new highs. Then you see there a lot of like 1 hour and a half of ranging reaction, and this PPL still ranging, and then starts again to make new highs, very slow between PPLs. Last attempt to make a new higher high. Look where it reacts, exactly here at these previous highs on the left hand side. This one reacted here, almost the PSA. Yeah. Probably it opened here, so it makes more sense to go here and here. Okay, and then you see a very strong rejection after failing to make new highs above 47,500. Price is giving you a break and retest, continuation down, and then you have like safer entry. Yeah, and the break and retest of the key level. This one was entry. And let's see, here really we have a high risk reward entry. Let's see why, because as you can see, as we saw here, we see a mirroring exactly here, because we see a break, a retest of the PPL, and then just price melting up, a retest of the PPL and strong resistance, and rallying up, then reacting again at a following PPL after moving 25, 50, 150, 150 pips. Then, of course, as you might expect, profit taking and, of course, sort of consolidation period, liquidity zone. See a grab of liquidity at the PPL, failing to break below. You have another bullish run. Of course, you don't enter here because there's no confirmation that the momentum, the consolidation period is over. And you see a last attempt to make new highs here, give you then strong rejection. Actually not really strong because it took hours to correct the move. As you can see, price still reacting very, very good at the PPLs. And then ending up here. So we had some medium risk entry, some safer entry, but that's it. This I won't count it. As we are still in the block. Okay, this is it for Bitcoin. Okay, we're going now to move to our last pair, which is, of course, EuroDollar. EuroDollar today had both the pairs, both the currencies involved in some reports. We had the euro being affected by the ECB, European Central Bank, interest rates and monetary policy, and of course also the dollar jobless claims and the Fed speakers. As you can see, from the morning, we're expecting either some ranging here or reaction at this level. As you can see, reacted perfectly at the key level / previous lows. As you can see on the here, we have the node block, we have a consolidation period, retest. What I wanted to see on gold and Bitcoin never happened here, and then continuation down, bouncing. It can still break following this path, because now it's just reacting to this trend line that was here from the morning. So let's jump on a 1 minute. There we go. As you can see, During Asian session, we reacted at the price sensitivity area at 1.1820 Okay, breaking our way back below, another below the other PSA. Here, this was pre-analysis. This was the analysis. So that's why here we already saw this move happening. So we were expecting either continuation of this trend or a break up and then above 1.1830, which was around here, around these wicks, safely above the key level. I risk reward at this rejection here. Didn't put the was at the key level mainly, or here 25 or below. Safer sells obviously only below. The price points were not on point today. As you can see here, you can start seeing a flat candle body support being created. 1, 2, 3, 4, 5 times failing to break. Give you the opportunity for high risk, high reward entries at the break retest of the PSA. Break retest, you already know of what, and then going to revisit the PSA slash intraday highs. Yeah, but failing to break. Here, as you can see, reaction at this point. Highs, so highs. Medium risk entry. Here, you see another strong rejection. Again, the concept that I explained before. Break and retest of this previous point, giving you the opportunity to enter and take advantage of, let's see, what is this range, if it is tradable. Like 8 pips with a stop loss of 3. So we are coming towards the almost 3 to 1. So which is the optimal, one of the optimal risk to reward ratios. And then there is some reaction. Again, another retest of this PSA. You don't want to enter here because you don't know, maybe it stops here and then goes back. You have a break and retest of the key level, not that clean, because we have not a key level, the PSA, because we have many times price going above and below, but never breaking below this PSA, as you can see, giving you then the opportunity to enter at the break and retest on the dot, continuation up. There you go. Okay, then we had some ranging up until the monetary policy and interest rate decision. Of course, you might see double bottoms, but you have these previous highs on the left hand side that give you a short range to play with. This range, which is like 8 pips like this one. You don't want to enter when there are such big news coming in. And we had here at quarter to 2, we had the decision to keep the interest rates low, which depreciates euro, deposit rate the same, but as well the central bank speakers not giving much clearness about the tapering. Very aggressive spike here, range to range, but as you can see, the key level is failing to break. We come into New York, make a new top wick. And then with the New York volume, we take advantage of this depreciation of the currency. And finally, break below. Here, why are you doing this? And we want range to range. Then again, this was also fueled by the positive numbers of the jobless claims, break retest. This was very aggressive moves for a currency. We call it a range because you don't have a clear direction yet. Yes, you have here a double bottom that you can spot. And when you make a new higher low, you can consider entering. Can you please stop? No? But then you have a much clearer of the London close, break and retest of the PSA, continuation up, reaction of course at this huge price sensitivity area, break and retest of the other PSA, breaking cleanly this PSA on the left hand side, and going to retest the key level, failing to break again. We see a strong reaction. First pullback ends there, failing to make new highs, so giving you confirmation of possible entry, but the safer entry is below here, and you have the confirmation a few minutes later when price breaks, retests twice, and then continues down again until it goes below the previous PSA and ending up the day, finishing the day very chugging away. Here, as you can see, was used as a support. Entry. High risk. Yeah. Okay. And this is it for euro dollar as well. Okay, obviously everything now is fucked, but it's okay. See you guys tomorrow.